All right, my next guest says that despite the runaway rally in growth stocks, value is still viable. Let's bring in BMO Capital Markets, their chief investment strategist, Brian Belski. All right, Brian, so you've got you outlined a number of reasons why value is still viable.
Yep.
Value has note that it's underperformed growth. The stocks with the next 12 months PE multiples less than 15% historically do very well. I mean, you've laid out a whole lot of things here. My only thing, though, is
it's not working, man.
Right. Because you also include a chart that shows the relationship, and it's been a decade of underperformance.
Yeah. So, what's really interesting is that most people that do what I do have kind of thrown process to the side because it's a momentum market. So, what I've been trying to explain to people that really since 2008, 2009, there's been this trend in Wall Street, kind of keep your seat. And what does that mean? Keep your job and just kind of follow the market tightly and follow whatever happening in the market, but also benchmarks in the S&P 500 or whatever benchmark. And that's what they've been able to keep their job. I think, brother, that a year from now, 2 years from now, we're going to be sitting back kicking ourselves why we didn't jump on value and why we didn't jump on small mid-cap.
If that is the case, we'll also be saying how easy it was.
Yeah.
It was low-hanging fruit.
It's kind of like youth was wasted on the young, right?
Yeah.
And I think at the end of the day, if you are a fundamental investor and you're looking at stocks with debt to equity below 1, earnings above the market, PEs below the market, and some of those names that, obviously in financials and healthcare, small cap look great, but I think that's why at the end of the day, stock picking matters, and I think that's where we want to be.
Here's the thing, though, and I love the point you brought up, because for all the talk of dumb money and how retail investors don't know what they're doing, I feel like it's Wall Street that's gamifying the stock market.
100%.
Listen, and the problem with this is that I have people who come on my service. They'll load up, the former portfolio based on my ideas and suggestions, and when they don't work out quickly, they want to quit. And this is scary to me because you'll never have those long-term gains that we've talked about. You'll never be able to change your life if the market goes down a little bit, or ideas that are great quality names but not working at that moment, if you always sell at a loss and walk away.
I had a great mentor to begin my career with, William O'Neill, and he used to tell me, Belski, retail's the dumb money and institutional's the smart money. It's completely the opposite now, 35 or 6 years later. And we have great conversations with wealth clients that have been sitting on the sidelines or waiting. They're much more patient, much more process-driven. I'll throw my Canadian hat on there for you. On the institutional side, there's such a thirst and need for performance that we kind of miss the forest through the trees. There's a lot of great names out there. You just have to be patient.
Right.
And remember, I also learned, I met Warren Buffett at a very young age too, and he said you buy when there's blood in the streets and where everybody else is not. And think about
it's interesting, though, because there is blood in the streets, but we can't see it. It's masked, right? It's being masked by just a handful of stocks. And so that buy signal, that traditional buy signal, most people aren't getting it because they're saying, well, there's no blood in the street. The S&P is near an all-time high.
Right. I think that, you go back to greed is good, and we need to start to see some of the big stocks actually really fail, and then you'll see rotation into value. Now, that's not to say that you shouldn't own the market or shouldn't own growth, right, because we're overweight technology and financials. It's a barbell. But we really think on those two sectors, financials are the place where you have not only value, but earnings are very depressed and understated. So we think the second half of the year could be a huge win in the value side, and especially financials.
So I'm looking at a list at some outperforms that BMO have that fit this profile of value stocks, and a lot of energy names on here, right? Baker, Conoco, Chevron, Devon, EOG, and interesting enough, all the sectors are now coming in except energy is starting to hold up there, and financials.
Yeah.
So maybe it's happening already. Maybe the nibbling has begun.
I think so, especially in financials. Our energy call is to underweight. Our call for financials is overweight, and we love the really big banks, Charles, and believe it or not, the really small banks, because we think the balance sheets and the cash flow are very strong there.
CRE exposure, does that play a role?
No, it doesn't. I don't think so, because I think a lot of that is behind us, and especially now with interest rates normalizing, right, I think when going back to work, I think that's not an issue.
So I'm going to ask you, less than a minute to go.
Yep.
The debate in the Federal Reserve. couple of wild cards out there.
Wow. I mean, we said in the beginning of the year that there was a very good chance the Fed would not cut rates. Everybody thought we were nuts. I think there's still a very good chance. I think we're entering into Goldilocks, and I think people are missing it. And the more people, I just got back from Europe last night, and the more people talking about global synchronized rate cuts, the more it's not going to happen. So I think the U.S. is going to continue to lead with respect to the debates. We all know what the outcome was. So I think politics have nothing to do with the absolute performance of the stock market. It can either detract or enhance, and we'll see if we have a regime change to enhance this.
All right, now Goldman, listen, 10 seconds, Goldman's at 6,300. My man, I mean, everyone's passing you up. What's going on? I feel like I'm watching Jordan in the later part of his year. You know, you're still a legend, but you were the perma bull.
I was, and
everyone's passing you up.
I was the first one at 5,100. I was the first one at 5,600. Everyone's kind of chasing us. And anytime you throw your process to the wind, that's when I worry on a short-term basis, and we are going to get our 10% correction.
Okay. After that, maybe you'll get back to legendary status?
Yeah, let's
I
hope.
feel better when Belski's got the highest target on the streets. All right, buddy.
Thanks, man.
Have a great weekend.